How's it going, everybody? Welcome your faces back to the Satoshi Club for another video where today I'm going to explain everything you need to know about fundamentals in trading and in investing, and I'm going to talk about the market when it comes to Bitcoin, Ethereum, the US 500, gold, and oil prices at the end of the video. So let's just get straight into it. A security's intrinsic value is a useful factor in actually determining, obviously what it's worth, whether you should invest in it or not, and it is the basic and core concept of fundamental analysis. So on the one hand, you have technical analysis, which is looking at the charts and chart work and trend lines and trend channels and supports and resistances and all of this stuff. But when it comes to fundamental analysis, it is all about macroeconomic factors such as the state of the economy and industry conditions, and microeconomic factors such as the effectiveness of a company's management if you're trying to look at fundamentals of a stock, or if you're trying to look at fundamentals of the overall market. Now, what I prefer to do is look at fundamentals on a global scale to see whether or not the Fed is hiking or decreasing rates, because that will give us a good insight into the market and, on the technical side, where the market will go. Is it going to go up? Is it going to go down? Is crypto going to go into a bull run? Is it going to go into a bear market? And all of this stuff. So key takeaways: first of all, fundamental analysis is a method of determining a stock's real or fair or intrinsic market value. Fundamental analysts search for stocks currently trading at prices that are higher or lower than their real value to find an opportunity to long or short this stock. Same goes for FX, same goes for the crypto market, same goes for pretty much any type of trading out there. If the fair market value is higher than the market price, then the stock is deemed undervalued and a buy recommendation is given, and more, right? But we're not talking about stocks here. What I like to do is talk about the global market situation, which is why I like to use sources such as Forex Factory to see exactly what type of news is coming out every single day, to see when we have important CPI, inflation news from countries, unemployment news from countries, FOMC meetings, Powell speeches, and all of this stuff that will have a large impact on the market and cause huge volume in the market as well, and make pushes, to start a bull market or to start a bear market, and so on. So if you found some knowledge useful so far, make sure to drop a like. Check out Forex Factory. I'm going to link it down below. I've done it a million times before. Very useful for your fundamental research. And once again, fundamentals will help you get an edge over a lot of the market, because a lot of people out there are simply using technical analysis to trade. But for me, it's kind of stupid, because if you could use fundamental analysis as well on a very basic level, just a basic understanding of economics will give you a large edge over a lot of people that are trading out there. So we have Forex Factory, very important. If you want to go even deeper into technical and fundamental analysis, you can use the PrimeMarket Terminal, which gives you around 30 to 40 years of different data up here, telling you everything about Forex pairs. It's basically institutional grade data at a price that is pretty much monthly, right? Wait, let me actually check this out. So I can't really see right now. Yeah, so you have the premium one, you have the pro one, you have the institutional one. It starts from $29 per month. It's a fantastic tool for all of you that are starting to get into cryptocurrency trading, into Forex trading, into stock trading, with both technical and fundamental analysis to get the ultimate edge over the market. Now, you do have seasonality as well, which I did talk about in a previous video, which you are able to check out, up here or something, because, it's very important to see seasonality as well when it comes to Bitcoin, when it comes to the US 500 and more. So that's also a pretty valid source out there. And lastly, we do have the BabyPips page, which you are able to use to learn a lot about trading in general. But they do have news. For example, this week I had in FX, eyes on the US inflation and UK GDP reports. So why do we have eyes on the US and UK GDP reports? Because they will impact the market in some way, shape, or form, and we will find some nice information and deduce some things from the market into put it into the equation. So let me get into a little story about how technical analysis is looking at this point, where the market is going to go, where the market is headed, and in general, I'm going to drop these links down below. You have BabyPips, you have Forex Factory, you have the PrimeMarket Terminal, and you have Seasonality, which I did discuss before. Check it out. It will be very useful for you. Drop a like if you enjoyed the video so far, and let's move on. So onto the technicals, or my favorite part of the video. I wanted to run down not only the US 500 and the general stock market situation in the world currently. I'm also going to show you Bitcoin, Ethereum, and gold price action, make some predictions, and make some deductions about how the market is, cooperating at this moment, what's happening with real estate around the world, what's happening with commodities, and what's happening continuing with, oh, now that I said commodities, we should probably add oil to the list as well to see where it's at. So as you can see, my green list, we have the US 500, which represents the entire stock market, as it's the index of the 500 largest, or not largest, it's an index of 500 companies from the United States, focusing mostly on tech and innovation and all of this other stuff. So it's not the Dow Jones Industrial Average, which is more about trucking and all this other stuff. It is literally focused on companies such as Apple, Tesla, and Microsoft, right? So we have the US 500, we have Bitcoin, Ethereum, you guys know about them. You have XAU USD, which is gold, and US oil, which is oil prices around the world. So let's just start with the US 500. What we've seen back in the day, since the whole, COVID thing started, was a massive increase in prices over a period of a few years. So ever since, March of 2020, all the way up until the peak in January of 2022, we saw a massive increase in prices, which was driven by overall fear in the market. First of all, that was the initial crash, but then after that, we did start seeing inflation happen, right? Why did inflation happen? Well, it's very simple, because a lot of countries did not manage to produce as much as they were printing in terms of money, because there were supply shortages, labor shortages, nobody could really work, and it really messed up the economy a little bit. So prices started increasing as a result of that. So first of all, a decrease in production, but also because of massive inputs of money into the economy, influx of money into the economy using stimulus checks and all of these monetary policies that are expansive, right? So the market went up, and then at one point the market started moving down as a result of the Fed chair Jerome Powell, which I did talk about in one of my previous videos. He said that they will start hiking rates, which means that as interest rates are increased, saving becomes more affordable, it becomes a better option, and a lot of more people will be saving their money in banks rather than spending it, because they are getting a larger rate of return on that money. So what happens when you save money? Well, less money is being spent, less economic growth happens, and the market simply starts to fall. So the market started to fall since then, and that was just a little background to this whole story. We do see the market going on in waves, but we are not slowing down just yet, as what I can see right here is a fantastic head and shoulders pattern, right? An inverse one. So actually not an inverse one. So let me just show you. You have the left shoulder, you have the head, and you have the right shoulder forming right now. So where I'm waiting for the price to actually hit is somewhere around these fib levels right here to enter a short position on the US 500 and put my stop loss above this area right here, which was a significant spike in price, and aim down into the 3.2k level, because that's the next logical zone of support that we do have down there. Why? Well, first and foremost, that is the zone that marks the Fibonacci levels from the start of the whole pandemic situation until the end of the whole situation, and also because it does represent the 61% fib level, and because it is a perfect support. That is where I will be looking for the US 500 to hit. And if you guys want to follow the trade, you can do so, but you should know I'm not a financial advisor, and you should always do your own due diligence before investing into anything in the blockchain, crypto, stock market, or any type of world out there, because you shouldn't just listen to advice from strangers on the internet. I'm just here to give you some pointers as to how you can try to see, rationally where the market is going to go in the future. And as we are still increasing rates, we're still hiking rates, we're showing no signs of slowing down just yet, the market is likely to continue moving towards the downside still for the time being after a short correction. Now, moving on to Bitcoin, right? Bitcoin has been kind of dead recently. So what we can see is a price action that is, lingering between the 15 to 20k level. It is not really moving anywhere. It is creating somewhat of a bottom, somewhat of a I don't even know what it's creating, right? What we can see on the weekly time frame when it comes to Bitcoin is a strong zone of previous resistance that turned into a zone of support. So we can see this right here. But the support was actually broken down from, right? So we broke down, and we are currently creating somewhat of a correction pattern. In my opinion, right, in my view, we could still move down towards more downside towards the 10k mark, and that would be the bottom of the bottoms, I would say, when it comes to crypto, when it comes to Bitcoin, because I don't see prices moving down below the 10k level at any point in the future. But in the other case, we do have the daily time frame where we can see that the price may actually break from this some sort of a correction pattern and continue moving up right away. More likely, we will be moving down because of rate hikes, because the market is still very, very difficult, because investors are still fearful, and because nothing is moving until Fed Chair Powell says that they will start reducing these rate hikes, that will start tapering and will start eventually just reducing hikes and allowing for more economic growth to happen, which will allow for more prosperity, more money pumped into the economy, and generally more growth in stocks, crypto, and anything out there. So that's the situation with Bitcoin. Ethereum is quite similar as well. What you can see right here is a little explanation of where crypto. I'm just going to remove the drawings and do it all from the start. On the weekly time frame for Ethereum, we do have a resistance. In the past, that was actually turned into a zone of support. It's not too clean though, so I'm not really going to draw it right now, but we did see on Ethereum a massive scale head and shoulders pattern back in the day. We have the left shoulder, we have the head, we have the right shoulder, we had the neckline. It was broken out of, and we are currently creating God knows what, right? It's very difficult to tell what Ethereum is doing at this point. We could either move down from this zone of support, or we could move up if we do break this level right here. Pretty similar to crypto in general, to Bitcoin in general. We are having somewhat of a triangle formation. The bottom point for Ethereum could be down into the $330 level, so that would be the bare minimum, like a very low chance of that happening, but it could happen. But if we continue moving up, then sky is the limit. But my first primary target would be a correction into the 3.5k level. And lastly, next to Ethereum, we do have oil prices, right? Let's see where, actually it's not lastly because we still have gold to cover, but oil currently on the weekly time frame is somewhat retracing, right? We did see a massive spike in oil prices as the pandemic was getting progressively worse, but since then oil prices have actually stabilized and the market has caught up, and currently we are sitting around the $74-$75 level. I do think that this is a nice sort of equilibrium when it comes to oil prices, so I wouldn't be looking at this too often at this point because they are kind of stabilized. And when it comes to gold, lastly, we are kind of rallying recently because of this whole rate hikes. People are fearful, the crypto market is falling, FTX crash happened, stock market is uncertain, housing market is uncertain. People are starting to buy up gold as it was at a discount at the $1,700 and even $1,600 level. The target for gold would be somewhere around the $2,000 level because it is a psychologically significant zone. So as you can see, we still have a zone of resistance that we do need to break in order to get up there, but in general we will probably see gold moving a little bit higher in the near future after a potential retracement or whatnot. We could see a $2,000 level reached at some point in the near future. So that's it for today's video. I hope you all enjoyed it. Make sure to drop a like, subscribe to the channel, comment down below with your favorite thoughts and opinions. And lastly, as I said, I'm not a financial advisor. This is just here to help you get a little glimpse into the market, and I hope you learned something new today. So without further ado, I'm going to end it right now, and I hope to see you all in the next video.